Bristol Myers this morning reported an inline quarter and they raised guidance, but earlier the stock was down. What was with that move?
I think healthcare in general was down early on in the day. You always like to hear what the companies have to say on the conference call, and because two of their key products went off patent in May, we were all kind of wondering what that was going to mean in terms of guidance and what did growth in sales do excluding Plavix and Avapro, and they actually grew 8% globally, which was pretty respectable. Those are two of their biggest drugs, so kind of breathing a sigh of relief, and we took advantage on the weakness to buy some.
They have been building up their portfolio to make up for those patent losses. One of their most recent ones was, I think, the acquisition of Amylin. Are you happy with the way they're building out their portfolio? Are they doing it fast enough?
Yeah, I think they are. They've been working for a couple of years in these partnerships. They've got one with Pfizer, with Lilly, and then AstraZeneca. What they're doing is they're taking on less risk because they're doing these JVs with these other big companies. So you take less financial risk, and of course you don't get as much upside, but they're able to build out their portfolio and their pipeline to complement what they already have in their existing pipeline. So I like the strategy very much, and I think that they're doing a really good job in executing that.
Eliquis is one of the drugs they're banking on going forward. How big of a story is this for the stock?
Well, it's a $9 billion market, right? So it is pretty big. I think that the fact that they needed more data from the FDA certainly was pretty nerve-wracking, and why the stock sold off earlier in the year. I think we're going to hear, they say, within the next 6 months. So, this is a very important drug for the company. They sounded very confident about it, but again, I point to their pipeline and all these other partnerships that they're doing so that they're not just dependent on one big drug like they were with Plavix and Avapro.
Now, you've been reducing your position in Abbott to get into this stock. What was the thought process there?
Yeah, it's simply a valuation call. We were up about 15–16% when we first started taking money off of Abbott. That's a big move for a drug stock, and I think a lot of people just kind of went into the healthcare and particularly the pharmaceuticals because they have such good yield. And Abbott was such an easy story because they're splitting up the company in two. So I still like it very much, but it should not be our largest healthcare position, just given the run that it's had, and the fact that Bristol Myers has actually lagged the peers year to date, and it also has a better yield. So we'll probably continue to take some money off of Abbott, and they'll keep it as a core position, and then use the money and use weakness to be continuing to add to Bristol.
And Bristol's premium valuation isn't a concern for you?
Well, it is. It definitely is. That's why, we waited until the company reported earnings and it was a little weak, so we bought it, So certainly that is not the selling point of Bristol by any means. But that's not the selling point for any pharmaceutical, by the way. They're all pretty expensive. Okay. I would just say that the yield is pretty attractive, and I like what the company is doing, and it's a nice offset to the beta that we have in the fund.